Very good morning, everyone. How are you all? Super, very fine. Today we are going to start our lecture number 7 for CA Inter Advanced Accounting regular batch. I know we have already completed 6 days of lectures. What I feel, to build a real connection, it takes some time. And in these 6 days, we have already created a strong bond. Hence, from today onward, for your entire CA journey, you need to consider me your big bro, your bhaiya for CA Inter Advanced Accounting. Whenever you feel any difficulty, any confusion, any low moment, I am just a call away. Believe me, I'll be there to help you. Not only from not only for CA into advanced accounting, I'll be there for you for CA final, especially for financial reporting paper. From concept to doubt, from revision to exam, I will guide you like a bhaiya who stand beside you in every step. From today onward, I will be your bhaiya for your entire CA journey, who will be with you forever, no matter what. Now let us start our lecture number 7. In the last class, we have already completed up to revaluation model. Let us once revise whatever we have done in the last class. Now let us start a revision. First point, meaning of PP. The PP are tangible items which are held for production of goods or for supply of goods or services or for rental to other or for admin purpose, and are expected to be used for more than one accounting period. If these two conditions are satisfied, any tangible item will be PP. Then we have now understood that spare part, standby equipment, servicing equipment. If it meet the definition of PP, apply AS10, otherwise apply AS2. Then coming to recognition criteria, two conditions: it is probable that future economic benefit flow to the entity and cost can be measured reliably. If these two conditions are satisfied, cost of an item of PP will be recognized as an asset. Once recognition criteria is satisfied, we will start initial recognition. Initial recognition, in that measurement will be done at cost. Cost means cash price equivalent. What is cash price equivalent? AS10 says that when the payment is not deferred beyond normal credit period, then cost price will be cash and cash equivalent paid or fair value of consideration given up. However, when the payment is deferred beyond normal credit period, in that case, cost price will be equal to present value of future payment, that is nothing but purchase price at normal credit terms. And the difference between future payment and present value of future payment will be interest, and that will be recognized as an expense over the period of credit unless it is covered under AS16. Then we started elements of initial cost. There are three elements: purchase price. Purchase price means invoice price minus trade discount rebate plus non-refundable duties and taxes. Then second, directly attributable cost, to bring the asset in present location and condition for intended use. We have done many examples for that. However, directly attributable cost means incremental cost, means any cost which will be incurred only when the asset is acquired or constructed. Then we have done initial estimated cost of dismantling, removing the item or restoring the site where it has been located. As per AS10, whenever there is an obligation of DRSL at a time when the item of PP was acquired, then it will be that cost will be capitalized. However, it will be measured as per the requirement of AS29, means we need to capitalize the present value of future expenditure. Means in that case, we'll pass one journal entry PP account debit to provision. Provision will be as per AS29 and PP will be debited as per AS10. However, if there is no obligation of DRSL, then there is no need to capitalize. Chalega? Yes, sir. Then we have done self-constructed asset. For self-constructed asset, the principal remains same, elements remain same. However, abnormal loss, if any, will be charged to PL as an expense. Any internal profit will be eliminated. If there are some income and expense from the incidental operation during the course of construction or development, that will be also transferred to profit and loss account. Chalega? Yes, sir. Then we have done when to cease capitalization. The capitalization receives during initial recognition when the item is ready for its intended use. What are excluded from the cost price? Now I hope you have understood this example. You have understood any costs which are not directly attributable will not be added to the cost price. It will be charged to PL as an expense. Then PP acquired in exchange of non-monetary asset. For that, there are two situations: when the transaction has commercial substance, then the cost price of PP acquired will be equal to fair value of asset given up plus minus cash adjustment, first preference. If it is not determinable, then fair value of asset received, second preference. If that is also not determinable, then carrying amount of asset given up plus minus cash adjustment. However, if the exchange transaction lacks commercial substance, then in that case, cost price of PP acquired will be equal to carrying amount of asset given up plus minus cash adjustment. Okay, sir? Yes, sir. Then PP acquired for consolidated price. In that case, the consideration whatever you have paid, that will be allocated to each item in the ratio of their fair value. Okay. PP acquired in case of finance lease, it will be recognized as per the principle given under AS 29. Then we started subsequent recognition. There are two options given: cost model, revaluation model. In case of cost model, the carrying amount of the PP will be cost price less accumulated depreciation less accumulated impairment loss. Impairment loss will be done as per AS 28, depreciation will be as per AS 10. So we will not discuss anything about impairment in this chapter. Okay, sir. Then under revaluation model, it will be fair value on revaluation date less subsequent accumulated depreciation less subsequent accumulated impairment loss. This will be the carrying amount. So option has been given to the entity, but this option is what class wise, not item wise. Means if an item of PP is revalued, if the item of a PP is revalued, then all the item under that class will be also revalued. Okay, sir. Frequency of revaluation, we have understood that when an item of PP experience significant changes in fair value, then annual revaluation. Otherwise, we can do revaluation after every 3 to 5 years. Accounting treatment of revaluation depends upon first term revaluation and subsequent revaluation. First term revaluation, if there is a upward revaluation, all the revaluation gain will be transferred to revaluation surplus. Journal entry will PP account debit to revaluation reserve. If there is a loss, means downward revaluation, then loss will be debited to PL. Journal entry will be PL account debit to PP. Subsequent revaluation accounting treatment depends upon previous revaluation. If previously upward, now again upward, the gain will be transferred to revaluation reserve. But previously upward, now downward, then loss will be first adjusted to revaluation surplus to the extent available. Balance loss will be debited to PL. Means our journal entry will be revaluation reserve account debit to the extent available, PL account debit with balancing amount to property, plant and equipment. However, previously if downward, now again downward, then again loss will be debited to profit and loss account. But previously downward, now upward, then revaluation gain will be credited to PL to the extent of previous decrease, and balance gain will be credited to revaluation reserve. Please journal entry will PP account debit to PL to revaluation reserve. Okay, sir. This much we have done. Okay. Then we have done adjustment of carrying amount of asset due to revaluation. In that case, there are two situations. First, technique one, that accumulated depreciation will be eliminated to the gross carrying amount of the asset. In that case, we'll pass to journal entry on the date of revaluation. Means entire accumulated depreciation will be adjusted with the gross carrying amount, which will pass one journal entry accumulated depreciation to PP, then PP account debit to revaluation reserve. Second technique is what gross carrying amount will be restated proportionately to the carrying amount, to the changes in carrying amount. Means in that case, first we need to find out what is the changes, percentage, means what is the surplus percentage. Means suppose your before revaluation the carrying amount was 1 lakh, after revaluation the carrying amount become 2 lakh, so you can see it has been increased by 100%. You will restate your gross carrying amount and accumulated depreciation by 100%. Means will increase PP account and accumulated depreciation account with that percentage increase. Then our journal entry will be PP account debit to accumulated depreciation, and the difference will be transferred to revaluation reserve. Okay, sir. Yes, sir. Then accounting treatment of accumulated revaluation surplus, in that two option has been given. Either will transfer the entire revaluation surplus to retained earning with revenue reserve on derecognition of the asset. Then our journal entry will be what revaluation surplus to revenue reserve on derecognition of asset. On derecognition of asset means when the item is sold. Second option has been given that portion of revaluation surplus will be transferred from revaluation surplus to retained earning or revenue reserve, and that amount of transfer will be equal to the amount of additional depreciation. Correct? Means every year from the date of revaluation during the remaining useful life will transfer some portion of the revaluation surplus to revenue reserve, and that amount will be equal to accumulated depreciation. However, revaluation surplus means revaluation surplus cannot be transferred through what? PL account. An additional depreciation will be always charged to PL account. This is only the transfer of revaluation surplus to revenue reserve with an amount equal to additional depreciation. Got this point? Up to this we have done in the last class. In the last class we have done up to this. Chalega. Now coming to next point, come to question number one. Question will take more for revision purpose. Come to question number come to question number 19. 19. Value Limited acquired a plant on 1/4/2004 for rupees 100 lakh. This is the cost price. The company charges straight line depreciation on the basis of estimated useful life of the asset as 10 years. So 10 years is the useful life, and the scrap value at the end as 2.5% of the cost. So scrap value means residual value is given. At the beginning of 5th year, the asset was revalued upward by 40% of written down value. Written down value means nothing but carrying amount. So what do you mean by written down value? Written down value and carrying amount are same. Carrying amount. And the revaluation profit was transferred to revaluation reserve. While charging depreciation after revaluation, estimated remaining useful life was assumed to be 6 years. So out of 10 years, if 4 years, because at the beginning of 5th year, the 4 year expired. So remaining life is 6 years only. And the scrap realization was expected to be 2.5% revalued figure. Means the residual value has been changed. Initially it was 2.5% cost, now it become 2.5% of revalued amount. No additional depreciation was adjusted to revaluation reserve account. Means you can see revaluation reserve has not been transferred to, means it means what? No additional depreciation was adjusted to revaluation reserve account. It means during the remaining useful life, the portion of revaluation surplus was not transferred to retained earning with an amount equal to additional depreciation. It means in this case, entity has opted for option number 1. Means they have done accounting treatment as per option number 1. So it means they have chosen option number 1. Chalega? Yes, sir. At the beginning of 8 years, the company found that asset is useless and accordingly decided to retire it. Means now the asset will become retired. On that date, on the date of retirement, the estimated realizable value of asset is 3,80,000. Asset in the loss on retirement of the asset to be charged to SOPL. What will be the accounting treatment of that loss? They have required that. So till now we have not done retirement, but I can explain that even though we have not done that. Come to question number 19. What they have said. So this is what Y0. What is the cost price? 100 lakh. What is residual value? 2.5%. 2.5 lakh. Correct. Useful life is equal to 10 years. And of course, depreciation is SLM method. This is Y1, Y2, Y3, Y4, Y5. So at the beginning of 5th year, this is beginning of 5th year. There was revaluation. There was revaluation. And it was revalued, means it was revalued by 40% of WDV. And here the remaining useful life is equal to 6 years. And residual value is 2.5% of revalued amount. Correct. Then Y6, Y7 and Y8. They have said at the beginning of 8 years. So at the beginning of 8 years is this. Beginning of year 8. The asset was retired. And on this date they have given net realizable value is equal to 3,80,000. So normally on retirement, asset is valued at lower of point number A carrying amount and point number B NRV. This point till now we have not done, but we have understood, and any loss will be transferred to PL account. This loss will be transferred to PL account as per AS 10. So this is the entire thing. It means we have to find out the carrying amount at year end 7, or you can say at the beginning of year 8. Yes, sir. So first we'll find out. Calculation of carrying amount of plant as at the beginning of year 8. What is the initial cost given? Initial cost is 100 lakh. Rupees in lakhs. Then we'll do less. Here is we need to charge depreciation for how many years? 4 years. This we need to understand. At the beginning of 5th year means at the end of 4th year. Correct? Means 4 year has been expired. Normally when they say at the beginning of 5th year, student will think 5-year depreciation need to be charged. Here you can do mistake. You need to understand the question properly. Question is more important. Then only you can apply the concept. Yes, sir. Less accumulated depreciation. We will say 100 minus residual value. You know the depreciation formula. However, after this we'll do depreciation only. 2.5 divided by 10 into 4. Chalega. So how much it is coming? 100 minus 2.5 divided by 10 into 4 is equal to 39. So 39 is the accumulated depreciation. What is the carrying amount as at year end 4? That is 61 lakh. Okay. Now at the beginning of year 4, there is a revaluation. Revaluation has been done by 40% WDV. This is nothing but WDV. We can say this is WDV. Yes, sir. We will add revaluation gain. And that will be credited to revaluation reserve. Revaluation reserve. Okay, sir. How much? It is 40% of 61. So 61 ka 40% is equal to 24.4. We will add 24.40. So this will be revised carrying amount. Revised carrying amount at beginning of year 5. Correct? That is 85.40. And this is nothing but revalued amount of fair value. This is nothing but fair value. Okay, sir. Got this point. Now we got a revised carrying amount at the beginning of year 5. Okay. And now we need to find out carrying amount at the beginning of year 8. Means again we need to charge depreciation for how many years? 1 year, 2 year, 3 year. We charge depreciation for how many years? 3 years. Okay, sir. Yes, sir. We will do less accumulated, or you can say subsequent accumulated depreciation. Subsequent accumulated depreciation. It means now this is the revised carrying amount. This revised carrying amount depreciated for the remaining useful life, and the remaining useful life is 6 years. Yes, sir. We will do 85.40, and now your residual value will change, and residual value will be 2.5% of 85.4. So 2.5%, it is 2.135 divided by 6 into 3. Understood? So how you have calculated this? How you have calculated this? This is 2.5% of fair value, that is 85.40 as per the information given in the question. Okay, sir. Now calculate this. 85.4 minus 2.135 divided by 6 into 3. That is 41. That is 41.6325. So what is the carrying amount as at the beginning of year 8 minus, that is 43.7675 chalega. This was the carrying amount. Now we can find out loss on retirement of asset. Madam, point number 2. Calculation of loss on retirement of asset at the beginning of year 8. So as per AS10 on retirement of asset, it is valued at what? Carrying amount or NRB, whichever is lower. Madam, as per AS10, any item of PP which is retired from active use and held for sale is measured at lower of point number A, point number A is carrying amount, point number B is NRB. Understood? Correct. What is the carrying amount? Carrying amount already be calculated. Yes or no? So what is this carrying amount? So carrying amount of plant at beginning of year 8 already we calculated 43.7675, and NRB is given at the beginning of year 8, that is 3.8 lakh. So 3.80. So lower is what? 3.80. Therefore, it will measure this amount. What is the loss on retirement? So loss on retirement, and this will be debited to PL. So how much loss? That is 39.9675. Only for understanding what is journal entry. Journal entry what? Loss on retirement debited to PL account to PP. Okay, sir. Chalega. But just try to understand. Right now, the asset is not de-recognized. Right now, the asset is not de-recognized because it is only retired. De-recognition will be on actual sale. I mean, right now we have not sold the asset. Okay, got this point? Right now, point number 3. Point number 3. This was not a requirement of question, but suppose if they require, then what need done? Then what need to be done? You know, calculation of balance of revaluation reserve at beginning of year 8. Correct? That is not required in question. Means this is only for your understanding I am doing. It depends upon two option availed. It depends upon what is the option availed for the accounting purpose of accumulated gain, accumulated revaluation gain. But on option 1, if entire revaluation surplus will be transferred to revenue reserve on derecognition of asset. And this has been given the question. As per question, this is as per question, chalega. In this case, can I say derecognition is not there, so no transfer will be done. Means no amount of revaluation surplus will be transferred to revenue reserve, chalega. Madam, how much revaluation gain? Revaluation gain at the beginning of year 5, it was 24.40 minus transferred to revenue reserve nil. The balance will be how much in the balance sheet now? 24.40. So this will be balance of revaluation reserve at the beginning of year 8. Or option number 2, there can be, only for your understanding. Right on option 2, if an amount equal to additional depreciation will be transferred from revaluation reserve to revenue reserve during his remaining useful life. This is not as per question. Not as per question. Means the question it is given entity has opted for option number 1, not option number 2. Okay, sir. So in this case, revaluation gain at beginning of year 5 is 24.4. Now we should do transfer to revenue reserve. Okay, the remaining useful life after revaluation was 6 years, and out of 6 years, 3 years has been expired. We'll use one simple formula. The 24.40 divide by 6 into 3, and that will be the amount of additional depreciation. That will be the amount of additional depreciation. Okay, sir. So 24.4 divided by 2, you can see that is 12.20. It means balance will be 12.20. This will be balance of revaluation reserve at beginning of year 8. Understood? So this is one simple formula. This formula you have understood. This formula you have understood. Got this point? Means I can explain in this way. I can explain this way. After revaluation, can you say this was your accumulated depreciation 41.6325 for 3 years. 41.6325 means what you have done? 85.50 minus what? 2.135 divided by 6 into 3. Correct. That was how much? This we have already calculated. How much we calculated? 41.6325. 41.6325. Correct. But if there would have been no revaluation, what would be the depreciation? So if there is no revaluation, then what would be the depreciation for 3 years? Then can you see there is no revaluation, then what will be your carrying amount? Your carrying amount would have been 61, and this 61 will be depreciated for remaining useful life. Correct. So what you will do? 61 minus 2.135 only, because residual value at the beginning of year 5 is what? 2.135. Are you getting what I am saying? So residual value means at what amount it can be sold. At what amount it can be sold at the end of useful life. So residual value will remain same under cost model and the revaluation model. Correct. Divide by 6 into 3, how much? So 61 minus 2.135 divided by 6 into 3. You can see it is 29.4325. And what is the difference? Minus 41.6325. It is 12.20. Same amount is coming. And this is the amount of additional depreciation for 3 years. Have you understood? Chalega. So this is what actual way to calculate additional depreciation. But this will be one shortcut. In exam, we'll do like this. I have just explained you how I got this amount 12.20. Means why I am saying 12.40 divided by 6 into 3. Because we can use this now. Are you getting what I am saying? In this you can see 2.135, 6, 3. This is common. And the difference between 85.450 and 61 is what? Is nothing but. Are you able to understand? 1 minute. It is 85.40 na. It is 85.40. My mistake. 85.40 minus 61 will be what? 24.40. If you have understood mathematics, you can say we can make common out 85.40. Means this all will be common. 2.135 divided by 6 into 3, this is common. So 85.40 minus 61 is 24.40 divided by 6 into 3. Understood? Have you understood? Yes, sir. So this is what actual way. This is one shortcut. Now only one doubt will come, sir, why you are taking in this case 2.135. 2.135. Let me explain you this. At the beginning of year 5, what is the residual value? So residual value is 2.135. So even though if I am using cost model, my residual value need to be reassessed. My residual value need to be reassessed. So residual value as will be as per current estimate. So residual value and useful life are actually an accounting estimate, and that require reassessment. So if initially it was 2.5 and now it become 2.135, so that will remain same for cost model and revaluation model. So residual value and useful life is an accounting estimate, and that estimate remains same for cost model revaluation model. Understood? Have you understood this point? Yes, sir. I think you have understood. However, in exam, don't think much. In exam, we'll do what? Amount of revaluation gain divided by total remaining useful life multiplied by expired useful life. Okay, sir. Yes, sir. We have understood this. Chalega. One question you do, Byron. So we have done 14, 15 and 19. These 3 questions we have done. One question you try. Okay. Now let us come to depreciation. What is the meaning of depreciation? Depreciation means what? Just try to understand. Depreciation does not mean decrease in the value of asset. Whenever I say depreciation, you say depreciation is decrease. No, this is not decrease. Depreciation simple meaning is what? Allocation of depreciable amount during the useful life of the asset as per some systematic method. It is a systematic allocation of depreciable amount during the useful life of the asset as per matching concept. As per matching concept. Depreciation is not decrease in the value of asset. Impairment means what? Reduction in the value of asset. So I say there are 2 points. Correct? So whenever we apply cost model, revaluation model, so there are 2 things. One is depreciation. One is depreciation. One is impairment. Impairment means what? Impairment means reduction in the value of asset. Depreciation means what? It is systematic allocation of depreciable amount during the useful life of asset. Okay, sir. Now depreciation is due to what? Depreciation is due to matching concept. This is due to matching concept. And this is due to conservatism principle. This is due to conservatism principle. Abhi right now we are discussing about depreciation. Depreciation is as per AS 10 and impairment is as per AS 28 coming soon in your life. So we right now concentrate only for depreciation, not for impairment. Understood? Correct? Okay, sir. Yes, sir. Any doubt? No doubt. Now, what is the meaning of depreciation? It is a systematic allocation of depreciable amount of an asset over its useful life. So, what is the meaning of depreciable amount? Depreciable amount means what? Under cost model, it is cost minus residual value, and under revaluation model, it is fair value minus residual value. I mean, whatever question we have done, before this. So for the first 4 years, it was under cost. So we have done cost minus residual value. Once it got revalued, we have done fair value minus residual value. Fair value minus residual value. Okay, sir. So under cost model, cost minus residual value. Under revaluation model, it is fair value minus residual value. Chalega? Yes, sir. Okay, sir. So what is the meaning of residual value? So residual value is an accounting estimate. It is an accounting estimate. So it is an accounting estimate. And can you say the estimation, whatever we have done initially, might change? The accounting estimate, whatever estimation we have done at year beginning, might change at year end because the circumstances might change, and therefore accounting estimate require reassessment at the end of each year. Therefore, accounting estimate require reassessment at the end of each year. Okay, sir. So it is an estimated amount that an entity would currently obtain or realize from the disposal of the asset if the asset is same as at the end of useful life. Suppose I purchase one asset today and the useful life of asset is 10 years. So what will assume? If this asset is of 10 years right now, so at what amount it can be sold in the market? If the age is 10 years, means if the useful life is over, then the same asset can be sold in the market at what price? That become residual value. Nothing to worry. Residual value will be always given in the question. So if given in the question, thank you very much. If not given the question, it will be considered as nil. Correct? So from exam point of view, if residual value is not given in question, then it will be assumed to be nil. If given in the question, thank you very much. Okay, sir. Yes, sir. So we have understood one thing, that it is a systematic allocation of depreciable amount. Now you have understood depreciable amount of an asset over its useful life. So what is the meaning of useful life? The useful life is also an accounting estimate. It is also an accounting estimate. Once again, accounting estimate might change during its useful life. Correct? Means it requires reassessment at the end of each year. So what is the meaning of useful life? Useful life is the period over which the asset is expected to be used. Means, can I say, it can be in terms of year, it can be in terms of month, it can be in terms of hour also. Whenever I say period, this period can be in terms of number of years, or number of months, or number of days, or number of hours. It can be in terms of number of hours. For example, just try to understand. I'm right now using camera, and camera has a lens, and the lens can be consumed. This lens can be used for 1000 hours. Means after 1000 hours we need to replace the lens. It means the useful life of this lens is 1000 hours. It can be in terms of year, month, days, or hours. Correct? So the period over which asset is expected to be used, that will be given the question. Or the number of production expected to be obtained from the use of the asset. For some type of the asset, we calculate useful life based on a number of production. Are you getting what I am saying? For example, if you have used printer, so that printer has some what? Ink, and that ink means whatever ink, cartridge, we say cartridge. So that cartridge can generate only 1000 copy, only 1000 photocopy. It means, can I say 1000 printed copy is the useful life of that cartridge. Understood? So sometimes it can be estimated based on number of production. It means, can I say useful life can be estimated in terms of number of period, in terms of number of production which is expected to be obtained from the use of asset. Whenever we calculate in terms of period, then we use either SLM or RBM. RBM is reducing balance method. In Bachman, I think you have called it WDB method. but now we'll not call it WD method, we'll call it reducing balance method or diminishing balance method, RBM, reducing balance method. Correct. Better name is reducing balance method. So WDB method, whatever you have done in your bachpan is similar to reducing balance method. So whenever useful life is given in terms of period, then we use straight line method or reducing balance method. And whenever a useful life is based on production, number of unit produced, then we use production unit method. Production unit method. It means there are three methods for depreciation. One is straight line method, one is reducing balance method, and third is production unit method. Okay, sir. So now you have understood what is useful life also. So now I think you have understood it is a systematic allocation of depreciable amount of an asset over the useful life. Now systematic allocation means it is based on three methods: SLM, RBM, or production unit method. Production unit method. Okay, sir. Now, can you say depreciation is normally charged to PL as an expense unless it is covered under other accounting standard. So what our AS10 says that normally depreciation will be charged to PL as an expense unless it can be capitalized as per the requirement of other asset, other accounting standard. For example, in AS2 we have done if suppose plant is used for production purpose, then depreciation plant will be added to the cost price of asset. Similarly, if I am using any plant and machinery for the construction of another property, plant and equipment. For example, I am using some plant for the construction of building, then depreciation of that plant will be added to the construction cost of that building. It will be capitalized. Yes, sir. So depreciation charge for each period should be recognized in PL unless it is included in the carrying amount of another asset as per the requirement of other accounting standard. As per the requirement of other accounting standard. Yes, sir. Chalega? Yes, sir. Now the question is that when to commence depreciation. So, बताओ we need to commence depreciation from which date? For date when the asset is ready for its intended use, or for date when the asset is put to use. I have already informed you. Useful life will commence once the asset is ready for its use. Therefore, depreciation will commence from date when the asset is ready for its intended use. Okay. So depreciation should commence from a date when the asset is ready or available for its intended use, even though it is not actually put to use. This is very important. Very, very important. Now, when to cease depreciation? The depreciation will be ceased once the asset become retired from its active use and held for sale, or the asset is de-recognized, whichever is earlier. So depreciation should cease from date the asset is retired from active use and is held for disposal. Can you say once it's retired, now we are not using it? If you are not using it, the question of charging depreciation will not arise. The question of charging depreciation to PL account should not arise. Okay, because if you are not using it, no benefit. Now why you are charging depreciation to PL account if there is no benefit? Got this point? So depreciation should cease from date when the asset is retired from its active use and held for disposal, or when the asset de-recognized, whichever is earlier. Sometime whatever before retirement the asset might be sold, or before sale the asset got retirement. So whichever is earlier, from that date we'll cease charging depreciation, we'll cease calculating depreciation. Okay, whichever is earlier. Understood? Correct. Now one note, one clarification has been given. Sometime, just try to understand. Depreciation does not cease when the asset become idle. Sometimes what happens? Asset become idle for a temporary period. Right now it happened with COVID-19 lockdown period. Now during COVID-19 lockdown period, there was no work only. We suppose there was no classes. So we were not using our any property, plant equipment. In that case, it become idle for a temporary period. In that case, the depreciation will not cease because it is idle for a temporary period. It is not retired from active use and held for sale. Got this point? One clarification has been given. Depreciation does not cease when the asset become idle or retired from active use unless the asset is fully depreciated. Retired from active use but not held for sale will not cease depreciation. Are you getting? Retired from active use means we are not using it, but we have not decided to sell it. It is not held for disposal. It means it can be again used. Correct. For example, I mean, right now I have one camera. I purchased another camera. It is with me. Right now I'm using my new camera. Before that I was having an old camera. Correct now. So old camera is right now retired from active use, but it is not held for sale. Why it is not held for sale? Because once this new camera might require some repair, etc. So I'll use my old camera. So old camera is retired from active use, but it is not held for sale. So we will not see depreciation on old camera. Will not cease depreciation of old camera. So this is one clarification they have given. Chalega. Okay, sir. Now coming to depreciation method. Depreciation method already I have said. SLM, RVM, PUM. SLM, RVM, PUM. SLM means straight line method. RVM means reducing balance method. PUM means production unit method. But one question will arise. So when to use which method? One thing you have understood that whenever useful life is estimated based on period, then we'll use SLM or RVM. When the useful life is estimated based on number of units produced, then we'll use production unit method. But one doubt will come, when to use SLM, when to use RVM. In that case, means when to use SLM, when to use RVM. For example, if I say for building, now for building, we should use SLM or RVM. If I say furniture, so for furniture we should use SLM or RVM. You say, sir, as per the information given the question. No, practically we need to understand when to use SLM, when to use RVM. So what our AS10 says that just find out a pattern of future economic benefit which will be consumed by the entity while using the asset. So we need to estimate the pattern of future economic benefit which will arise while consuming the asset. We need to estimate the pattern of future economic benefit. And if the pattern of future economic benefit is uniform, if the pattern of future economic benefit is uniform throughout the year, then use SLM. Because in SLM, we calculate uniform depreciation. But if the pattern of future economic benefit is diminishing year after year, normally it happens. If I am using camera, the future economic benefit will decrease year after year. Correct? So in that case, we'll use RVM. So it depends upon the estimated future economic benefit pattern to be consumed by the entity while using the asset. So the depreciation method used shall reflect the pattern in which asset future economic benefit are expected to be consumed by the entity. It means here is we need to estimate. So this is also an accounting estimate. It is also an accounting estimate. Means whether we should use SLM, RVM, PUM is based on accounting estimate, and therefore depreciation method is also an accounting estimate. Depreciation method is also an accounting estimate. Means can is a useful life, residual value, depreciation method. All three are accounting estimate. All three are accounting estimate. All three are accounting estimate. Okay. So this method includes straight line method, reducing or diminishing balance method, production unit method. You know about straight line method, RBM, and production unit method. Correct. Now this you can read, but let me give you some questions only for revision purpose. I know you know about SLM. I know you know about RBM. I know you have done PUM also in CA Foundation, but then also quite possible you have forgotten. Let me ask you some questions. First, write down formula. So depreciation we are doing. Depreciation we are doing. So there are three methods. Method 1, SLM. In that case, annual depreciation is equal to there is a depreciable amount. Now you know what is depreciable amount divided by useful life. Now depreciable amount, you know, under cost model it is cost minus residual value. Under revaluation model it is fair value minus residual value. That I will write down. It is either cost minus residual value. It is fair value minus residual value. Okay, correct. Okay. Now sometime whatever rate of depreciation is given. If the rate of depreciation is given, then how to calculate depreciation? If rate of depreciation is given, then annual depreciation is equal to cost price or fair value into rate of depreciation. This is or, huh? Cost price or fair value into rate of depreciation. Okay, sir. You need to understand whether rate of depreciation is given or useful life is given. If useful life is given, then this is the formula. If the rate of depreciation is given, this is the formula. Means this rate of depreciation is actually calculated on gross book value. This is nothing but gross book value. Okay, sir. So rate of depreciation is equal to annual depreciation divided by either cost price or fair value into 100. And therefore, this rate of depreciation is on cost price. And therefore, sometimes we call it original cost method also. Original cost price method also. Correct? Yes, sir. Okay, sir. Yes, sir. Now, method number 2. Method number 2 is equal to RBM, reducing balance method. In this case, annual depreciation is equal to carrying amount. Carrying amount. Now you know what is carrying amount. Carrying amount means net book value at the beginning of the year. Net book value means after depreciation. The net book value at beginning of year multiply by rate of depreciation. Multiply by rate of depreciation. चलेगा? Multiply by rate of depreciation. This is the annual depreciation. And every year carrying amount will change. So every year carrying amount will change. Your depreciation will also change. Your depreciation is also going to change. But sometime if rate of depreciation is not given, then it means we need to calculate rate of depreciation. So what is the formula to calculate rate of depreciation? Rate of depreciation, ROD means rate of depreciation, is equal to 1 minus residual value divided by cost price, correct, to the power 1 by useful life. 1 by useful life. This is what the formula to calculate rate of depreciation. Just write down, I will explain. Correct. So in this case, if the rate of depreciation is not given, then this is the way to find out rate of depreciation. Okay, sir. Normally in exam, rate of depreciation will be given. Means very rare situation in RBM they are not giving rate of depreciation. They will always give rate of depreciation. Correct? Yes, sir. Now method number 3 is what? Method number 3 is production unit method. In this case, annual depreciation will be equal to depreciable amount. Now you know what is depreciable amount. Multiply by actual production. Actual production divided by total estimated production. Total estimated production. This is the formula for production unit method. Super easy. Have you understood? I'll take some example, but this much you have understood or not? Okay. Chalega. Write an example. Now write an example. Example 1. Cost price is equal to 10 lakh. Residual value is equal to 1 lakh. And rate of depreciation is 10%. Calculate depreciation for SLM and RBM. Okay. Now SLM you will give me, RBM also you will give me. Solution. Year 1 depreciation and year 2 depreciation. Then first you calculate. If you are doing some mistake means it will be a revision. Okay sir. Batao. Calculate depreciation under SLM and RBM. I am giving you one minute. Just you do by your own, then I will do. Now, whenever rate of depreciation is given, then residual value is not relevant. Okay. So whenever rate of depreciation is given, then add on. If rate of depreciation is given, if rate of depreciation is given, then residual value is not relevant for depreciation calculation. Here you can do mistake. If you have done 10 lakh minus 1 lakh, 9 lakh ka 10%, then it is a mistake. If you have done it, accept it. Okay. So this will be year 1. It will be what? 10 lakh into 10%, 1 lakh. And for year 2 also 10 lakh into 10%, 1 lakh. But for SLM, but for RBM, we'll do carrying amount. And first year carrying amount is what? 10 lakh only. So 10 lakh into 10%, it is 1 lakh. But for second year, the carrying amount at the beginning of the year will be 10 lakh minus what? 1 lakh, that is 9 lakh into 10%, that is 90,000. This is the difference. This is only for your revision purpose. I know if you are knowing this, it is only recap. Okay, sir. Example number 1 you understood. Come to example number 2. Example number 2. Cost price is equal to 10 lakh. Residual value is equal to 1 lakh. And useful life is equal to 10 years. Now you need to calculate depreciation for SLM and RBM. Of course, you will do it. Do it by your own. First, you try, then I will do. Only for year 1 and year 2. So, SLM, I think you will do correct. 10 lakh minus 1 lakh divided by 10. So, it is 9 lakh divided by 10. That is 90,000. Here also 9 lakh divided by 10. 90,000. Or you can say in this way, or you can say, because out of 10 lakh, 90,000 depreciation done. Correct now. What is the carrying amount? Carrying amount become 10 lakh minus 90, 8 lakh 10, 8 lakh 10 minus 1 lakh. So you can say 10 lakh minus 90,000. It is 9 lakh 10. 9 lakh 10 minus 1 lakh is equal to 8 lakh 10. We can say 8 lakh 10,000 divided by 9. Same answer will come. Check karo. 90,000. Either you can say these or these. Both are same. However, it will be same only now. Why to calculate? If this is 90, this will be 90. Now, what is RBM? RBM bata. RBM. RBM, I think you can do mistake. What is your answer? Now, RBM, if you are saying 10 lakh divided by 10 or 10 lakh minus 1 lakh divided by 10, that is 100% wrong. What formula I have given? You can see the formula means you are not using the formula. Formula is what? Annual depreciation under RBM is equal to carrying amount multiplied by rate of depreciation, and I have not given rate of depreciation. Correct now? Means for RBM normally they will provide rate of depreciation, but if rate of depreciation is not given, you need to calculate it. It means in this case we'll do one working note. I'm going to calculate rate of depreciation for RBM. It is very rare case in exam. Very rare case. Normally it will be given 99.9% rate of depreciation. In case of RBM it will be given. Only I am just explaining for your better understanding, because just try to understand this situation comes and rate of depreciation not given, so you need to ask rate of depreciation now. Okay sir, so how to calculate rate of depreciation? Formula I have given. Rate of depreciation is equal to 1 minus residual value divided by cost price to the power 1 by useful life. This is the formula. So residual value I have given 1 lakh, cost price was 10 lakh to the power 1 by 10 to the power 1 by 10. I have already said in this accounting standard 10 I will take time. Okay. This is 1 minus 0.10 to the power 0.10. Now the question is that how to solve this? First thing, we can't use scientific calculator. And can you see normal calculator, they have given only under root 2. They have not given this 0.10 under root. Yes or no? So how to calculate this? So this cannot be calculated by simple calculator. This cannot be calculated directly by simple calculator. However, there is one process to calculate this by using simple calculator. That process I am going to explain. Okay, sir. Okay. It means we need to solve a to the power b in calculator, in simple calculator, not scientific calculator. In this, what is the first step? We do under root a 12 times. Only for your extra knowledge. Believe me, in exam, chances are rare that they will give one question for RBM without rate of depreciation. Okay, sir. Just write down, this is only for your extra knowledge. X factor. Okay, sir. Yes, sir. Under root A 12 times. The second step is what? Whatever amount came, you need to do, you need to minus 1 from that. Then step number 3, into B, multiply by B. Then step number 4 is equal to plus 1, and step number 5 is equal to into, equal to together. How many times? 12 times. This is the step. Now A is 0.10 and B is also 0.10 in our example. It can be different also. It can be different. Correct? Are you getting? So what is our A? 0.10. Do under root 12 times. Okay, everyone. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 times done. Then whatever amount came, minus 1. Okay. Now whatever amount came into B. B is what? 0.10. 0.10. Now whatever amount came, plus 1. Now plus 1 you have done. Now whatever amount come, into equal to, how many times? 12 times. Do into equal to 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. It is, my answer is coming 0.7943. If your answer is this, means you are doing correct. It means we got 0.7943. So 1 minus 0.7943. What is the answer? It is 0.2056, and in percentage you can add on 20.56%. It means the rate of depreciation is 20.56%. Rate of depreciation is 20.56%. I just want to inform you that rate of depreciation under SLM is 10%. It does not mean for RBM also it will be 10%. For RBM you need to find out. So when you are doing practical cases and your client asks you what is the rate of depreciation under RBM, then you can calculate in this way. So I am just giving extra knowledge to you. Okay, sir. Just write down somewhere this step. This step might be used not in, suppose you are not using advanced accounting, might be used in your financial management or in CA final classes. So this is very useful for CA exam, but when, I don't know. Write down somewhere. It is very, very important. Not from exam, but somewhere else it will be helpful to you. So 20.56, now you can find out. It is 10 lakh into 20.56%. Ten lakh, that is 205,600. Then this become 7,94,400 into 20.56%. That is 1,63,328. 328. Understood? Have you understood this? Any doubt? So this is in case of RBM. I think this is a new point for you, SLM RBM, and this will help you. This example will help you to understand. Actually, sometimes what happens, we think that we know, but actually we don't know. Okay, sir. Now one example I will take for what? Production unit method. Example number 3. Example number 3. Suppose cost price of the asset is 10 lakh. The residual value is suppose 1 lakh, and estimated total production is 50,000 units, and they have given actual production for year 1, year 2, year 3. Year 1, 20,000. Year 2, nil. Year 3, 30,000. Correct? So what is the depreciation? The solution. Year 1, year 2, year 3. So can you say we'll take 9 lakh because depreciable amount is 10 lakh minus 1 lakh, 9 lakh. So first year 9 lakh into 20,000 divided by 50,000. Correct. So 9 lakh into 20,000 divided by 50,000. It is how much? 3,60,000. Can I say year 2 to actual production nil? Because actual production nil, so depreciation will be also 0. So this is 0. So only in case of PUM, depreciation can be 0. But in case of SLM, RBM, depreciation cannot be 0 even though you are not using it. Means in case of SLM, RBM, even though you are not using it, depreciation need to be calculated. But under PUM, depreciation can be 0 if the actual production nil. For example, entire year, there was no production because the factory was shut down. And then year 3, you have recommenced the work. Quite possible? Quite possible. So year 3, it is 9 lakh into 30,000 divided by 50,000. So 9 lakh into 30 divided by 50 is equal to 5 lakh 40. And you can see sum total of this is equal to 9 lakh means we are doing correct. Okay, sir. Only for your understanding that in case of SLM RBM, depreciation cannot be 0. But in case of PUM, depreciation can be 0. Understood? Have you understood this? Chalega? Yes, sir. Okay, sir. Yes, sir. So we have understood this method. And we have understood under PUM, depreciation can be 0 when there is no production. But even though the depreciation is 0, it is not ceasing of depreciation. Ceasing is will stop depreciation charging permanently. So depreciation 0, it does not mean we are actually ceasing the charging of depreciation. No, will be calculating depreciation whenever there is a actual production. Okay. One more, just try to understand. If the residual value sometime can be more than carrying amount, means if I say in this way, example number 4. Example number 4. Correct. Suppose after 4 years, carrying amount is 5 lakh and residual value is 6 lakh and remaining useful life ten years. So what is that depreciation? 0. In this case also depreciation will be 0. In case of SLM and RBM. In case of SLM and RBM, the depreciation 0. Got this point? Because residual value is more than carrying amount. So whenever residual value is more than carrying amount, depreciation will be 0. Okay, that is only given. If residual value is more than or equal to, you can say equal to also, then depreciation can be 0. However, the above situation will not be considered as ceasing of depreciation. Chalega? Yes, sir. Okay, sir. Okay. Yes, sir. If this much you have understood, I like to explain component accounting. Component accounting will be new for you because I don't think so in CA Foundation the faculty will do component accounting. Let me explain component accounting. Now suppose you purchase one aeroplane. You purchase one aeroplane. I'm not a good artist, but somewhat it looks like aeroplane na. Assume it is aeroplane. Okay. Now you purchase this aeroplane. Suppose at how many crore? 100 crore. And useful life of this aeroplane is, let's say, 20 years. 20 years. So when I say aeroplane, normally we say aeroplane by saying the outer body of aeroplane. But can I say it has many small, many component, many parts. For example, it has what? A engine, engine. It has what? Furniture and fixtures. Correct. And there are many other parts also. Correct na? AC, compressor, many things. I'm not going to that. Let's say there are two major parts. You can see there are tires, and the tires of these are also very big tires and very, it has also heavy cost. So let me give you three items only. You can see engine might require replacement after every 5 years, and furniture and fixture might require replacement after every 10 years. It means even though you can use this aeroplane for 20 years, but engine require replacement after 5 years, it means useful life of the engine is 5 years. So should you depreciate entire 100 crore for 20 years? No, that will be wrong accounting. That is not fair accounting. Therefore, our AS10 says we need to go for component accounting. So what they say, this 100 crore should be allocated in all component. So in these, suppose, just try to understand, suppose the cost price of engine, the cost price of this engine out of 100 crore, 20 crore belong to what? Engine. 30 crore belong to what? Furniture and fixture, and the outer body means the aeroplane. For these, the principal part, whatever you can say, is 50 crore. And the useful life of this is what? 20 years. Means this will be depreciated for what? 5 years. This will be depreciated for 20 years. And this will be depreciated for 10 years. This is component accounting. Don't worry about exam. In exam, each component useful life, each component cost price will be given. Only to calculate depreciation component wise. Okay, sir. This is known as component accounting, and AS10 mandate component accounting for depreciation. Means AS10 says for each item of PP, for depreciation we need to follow what? Component accounting. For depreciation we need to follow component accounting. Means for accounting means we'll say aeroplane account debit to bank. We'll not say engine account debit to bank, furniture and fixture account debit to bank, and outer body account debit. No. Journal entry for aeroplane will be aeroplane account debit to bank. But for depreciation, we have to calculate depreciation as per component wise. Okay. So each part of an item of PP with cost which is significant in relation to the total cost of item should be depreciated separately. Significant means there may be some component, for example, small spare part. So there may be some component which cost is not significant. It is insignificant. That you can ignore for depreciation, means that cost will be included in the balance part. Okay. So only the component having significant cost in relation to total cost, for that we need to calculate depreciation separately, that is component wise. Then they have given one clarification: a significant part of an item of PP may have a useful life and depreciation method that are same as the useful life and depreciation method of another significant part of the same item. Such part may be grouped in determining the depreciation charge. Let me explain. Suppose there is one item of PP, correct, 100 lakh, and it has different component A, B, C, D, E, and one is what we call it principal part. We call it principal part. Correct? Means when I say camera, the outer body is what? Camera, na? That is principal part. Okay? Yes, sir. Now let us divide the cost. Don't worry about the cost. The allocation they will give you. 5 lakh, 15 lakh, 20 lakh, 25 lakh, and let's say this is 10,000. How much? 5 plus 15 plus 20 plus 25. 5 lakhs, huh? correct? Minus 100, 35 lakh. So 35 lakh minus 10,000. So this become 34 lakh 90,000. Okay. Now you can see this is significant. This is also significant, 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 but this is insignificant. And therefore, what our AS10 says that insignificant component may be excluded from this grouping and it can be clubbed with principal part. Means this will be remainder. This we call as remainder part. Remainder part. Okay, sir. Means this become what? 40 lakh. Sorry, this become 35 lakh. 35 lakh. Okay, sir. Got this point. Now I'll find out useful life. So useful life is 5 year, 5 year, 10 year, 10 year, and 20 year. Then we'll find out depreciation method. This is SLM, SLM. This is SLM. This is RBM. And this is SLM. Correct. Now you can see this can be grouped. It can be grouped for depreciation method, but this cannot be grouped because their useful life is same, but depreciation method is not same. This cannot be also grouped because here useful life is different. So here actually for depreciation, we can say this become group A, this become group B, or we can say, let us say group 1, this become group 1 for depreciation, this is group 2, group 3 and group 4, correct, for depreciation purpose. So there are 4 groups for component accounting and then we can charge depreciation. Have you understood? Depreciation very easy. It is the cost is 20 residual value I have not given. So 20 divided 5, that is the depreciation. Here 20 divided by 10, here 25 divided by 10, here it is 35 divided by 20, that is the depreciation. If the residual value is given, then also you can calculate. This is known as component accounting. Understood? Yes, sir. Component accounting also done. Now, depreciation method based on revenue. Just try to understand what they want to say. Depreciation method based on revenue means that, example, if I say in this way, the useful life is 5 year, Y0, Y1, Y2, Y3, Y4, Y5, and the cost price is 100 lakh, and you have estimated sales. Means at Y0 you have estimated that during 5 years you will generate this much revenue every year, and your estimated sale is suppose 10 lakh, 20 lakh, 30 lakh, 20 lakh, 20 lakh. This is the estimated sale. So can you depreciate this asset based on revenue? Means can you show depreciation for year 1 is equal to 100 lakh into 10 lakh. This is how much I have given 100 only. Check karo, 30, 60, 40. So it is 100 lakh. Can we do it this way? Bolo. No, this is not permissible. So there are only 3 methods: SLM, RBM, PUM. PUM is production unit method. In that case, you depreciate based on number of units produced, not based on revenue. So what our AS10 says, the depreciation method that is based on revenue that is generated by the activity that include the use of an asset is not appropriate. Simple word. If they have given sales information, we can't depreciation based on the ratio of revenue, ratio of sales. So depreciation based on revenue is not appropriate as per AS10. As per AS10. Okay, sir. Simple point. They can ask this point in MCQs, multiple choice question. They can ask this point in multiple choice question. Then coming to next point, changes in the useful life, residual value, and depreciation method or accounting estimate. Useful life is also accounting estimate. Residual value is also accounting estimate. Depreciation method is accounting estimate. So that require reassessment at the end of each year. And because of that reassessment, there might be some changes in this. There is some changes. What AS says that this will be accounted as a change in accounting estimate as per AS5. As per AS5, AS5 is coming soon. AS5 says on prospective method. Prospective method means from the date of change. You need to calculate depreciation, revise depreciation from the date of change. From the date of change. So residual value, useful life, depreciation method should be reviewed at least at the end of each financial year. At least at the end of each financial year. And any change should be accounted as changes in accounting estimate as per AS5, that is prospective basis. So what is prospective basis? That I need to explain. Should I explain? Yes, sir. Why not? Madam. Example. Example, Adam. Example. Adam. Reassessment of useful life, residual value, and depreciation method. Example number 1. Try to understand. This is Y0, Y1, Y2, Y3, Y4. And initially the cost price is equal to 50 lakhs. Initially the useful life was 10 years and initially the residual value was 5 lakh. And what happened? At year end 3 means at year end 3, entity has decided to reassess the useful life. And now the useful life is equal to 12 years. So reassess the useful life 12 years. So if I say reassess the useful life, this is total useful life or remaining useful life. If I say reassess the useful life, it is total useful life. It is total useful life. Correct. It means this is the date of change. Now the question is that everyone, normally student have one doubt. We need to calculate revised depreciation. Revised depreciation based on revised useful life for third year or fourth year. In this only doubt will come. Have you understood the question? The entity has decided to review the useful life of the asset at the end of third year. And now the useful life from 10 years become 12 years. From 10 years it become 12 years. Now the question is that we need to calculate revised depreciation for third year or fourth year. For third year or fourth year. This is the question. You think for 2 minutes and the meanwhile I'll take a break. In the meanwhile, I'll take a break. Okay, means I'll discuss this point after break. So you also take a break. I will also take a break. But think this. After break, we'll discuss this point. Okay, sir. Yes, sir. Now, can we start once again, everyone? Okay, sir. So before break, we were discussing about one example, and that example was related to reassessment of useful life. So what was the example? The cost price is 50 lakh, useful life is 10 year, and residual value is 5 lakh. And at the end of third year, the useful life was reassessed from 10 year to 12 year. Now the question arises that we need to calculate revised depreciation for year 3 or year 4. Just try to understand. First thing, we calculate depreciation at the beginning of the year or at the end of the year. Of course, at the end of the year. So when we calculate depreciation at the end of the year, we should review useful life, residual value and depreciation method at the end of the year. Means this reassessment has been done for third year, not for fourth year. Understood? Just write down. Write down one thing. As we calculate depreciation at the end of the year, and hence reassessment of useful life is for third year. For year 3 and revised depreciation will be from year 3, not from year 4. This conclusion, have you understood? Have you understood this thing? So for year 1, what is the depreciation? It was 50 minus 5 divided by 10. So 45 divided by 10 is equal to what? 40 divided by 10 is 4.5 lakhs. Then year 2, it will remain same, 4.5 lakhs. But for year 3, we will first calculate the revised carrying amount. It will be 50 minus 9, 50 minus 9. Or I will say always do in this way, better. Better always do in this way. You will never do mistake. Okay, correct. Write down opening balance. Do it this way. What is the initial cost? Write down in this way, you will never do mistake. It is 50 lakh. First you calculate accumulated depreciation for 2 years, because you need to calculate revised depreciation for third year. It will be 50 lakh minus 5 lakh divided by 10 into 2, that is 9 lakh. This is the carrying amount at year end 2, that is 41 lakh. Okay, sir. Correct. Now we have to calculate less depreciation for year 3. So this will be what? Now it is 41 lakh. That will be depreciated for remaining useful life as per our reassessment, minus what? 5 lakh. Now your remaining useful life, the revised remaining useful life, so 12 minus 2, you do 12 minus 2. 12 minus 2, it is how much? So 41 minus 5 divided by 10. It is 3,60,000. It is 3 60,000. So this become carrying amount at year end 3. Understood? That is 37 lakh 40,000. Always calculate in this way. You will never do mistake. Understood? Normally student think what they will do means what mistake they may do here. What mistake they may do here, that they will not deduct residual value. It is 41 lakh minus 5 lakh. So minus 5 lakh will do now. So your revised depreciation will be revised carrying amount. Means the carrying amount minus residual value divided by remaining useful life as per reassessment. Okay, sir. One more question. Example number 2, whatever. The similar question I'll give in you different way. And you'll understand why students are confused in exam. This is y0, y1, y2, y3, y4. Correct. Cost price is equal to 50 lakh. Cost price is equal to 50 lakh. Residual value is equal to 5 lakh. And useful life is equal to 10 years. Okay. Understood? Are you getting what I am saying? Now what they have given? At the beginning of year 3, at the beginning of year 3, remaining useful life is 10 years. Remaining useful life is 10 years. And residual value, I am changing residual value also, is now 6 lakh. Not just try to understand. Now I have given at the beginning of year 3. At the beginning of year 3. In this it was at year end 3. At year end 3, so of course we calculate depreciation for year 3. So this reassessment is for year 3. Now they have given at the beginning of year 3. It means year 2 depreciation is already calculated. Means this has been calculated and this has been calculated. Means this is for this year now. Reassessment has been done for third year and onward. Got this point? So at the beginning of year 3, remaining useful life. Try to understand the language. Try to understand the words. Okay, if you understood the words, you will never do mistake. In this case, at the beginning of year 3 means year 2 depreciation has been calculated. Year 2 depreciation has been calculated. Now you can't say this. Now this is for this year only. Have you understood the language? Try to understand emotions. I hope you are understanding the emotions. Got this point in this case, what will do? Correct. Always do the way I have said. First, initial cost 50 lakh less accumulated depreciation is 50 minus 5 divided by 10 into 2. The same 9 lakh will come. Then we come 41 lakh. This is carrying amount at year end 2. Now from this we'll calculate less depreciation for year 3. So what do you do? 41 lakh. Now minus 6 lakh because residual value has been changed from 5 lakh to 6 lakh. Divide by what? Remaining useful life is 10 years. Now I have given remaining useful life. I have given remaining useful life. The remaining useful life is 10 years. Means initially means as per original life, as per original estimate life, the remaining useful life 8 years. So 8 years has been changed to 10 years. Understood? Yes, sir. So divide by 10, it will be how much? So 41 minus 6 divided by 10 is equal to 3,50,000. 3,50,000. What is the carrying amount at year end 3? That is 41 minus 3.5, that is 37,50,000. Have you understood the difference between first and two? And normally students are confused about this. Ki why sir in this you are saying this, here I am saying this. That you need to understand. Chalega. So normally whenever the reassessment has been done for at the end of year 3, it means we need to calculate revised depreciation for that year 3 only. That you need to understand. Okay sir. Chalega. Yes sir. One more question. Example number 3. Cost price is equal to 100 lakh. Residual value is equal to 5 lakh. Useful life is equal to 10 year. And initially it was SLM. Correct. Now at year end 3, now you will say at year end 3. If I am saying at year end 3, I am not saying at year beginning 4. Okay, at year end 3. At year end 3, SLM was changed to RBM. Now as per RBM, they have given rate of depreciation 15%. 15% rate of depreciation given. We are not concerned about. I think they have given rate of depreciation. Okay. Now in this, whether we'll calculate revised depreciation for year 3 or year 4. Of course, year 3 will calculate for year 3 because at year end 3 it has been revised from SLM to RBM. It means we need to calculate depreciation for year 3, not for year 4. Year 3, not for year 4. Understood? Got this point? So how you will calculate? First, initial cost. Now you must be thinking, sir, every time you are saying revised depreciation of year 3, don't be confused. Try to understand every example differently. Okay, sir. Yes, sir. If you want, I can change this for 4th year. Are you able to understand? Yes, sir. Initial cost 100 lakh. Rupees in lakhs less. Accumulated depreciation 100 minus how much? 5 divided by 10 into 2. It is 95 divided by 10 into 2. That is 19 lakh. So this is carrying amount at year end 2. That is 81 lakh. Now less depreciation for year 3. We want carrying amount. Carrying amount is what? 81 into 15%. So 81 into 15%, that is 12.15. So what is the carrying amount at year end 3? That is equal to 68.85. Understood? Have you understood this? Now, whenever we are using rate of depreciation, then residual value is not relevant. That already I have informed you. Got this point? Chalega? Yes, sir. So 3 questions, I think 3 example you have understood. Now come to the last point for depreciation, land and building. Now land, you all know that land is not a depreciable asset because it has indefinite life. What do you mean by indefinite life? Because the indefinite life means the life cannot be determined. Life cannot be determined because land has finite life. Correct now. So land has an unlimited useful life and therefore it is not depreciated. But sometime what happens? Some portion of cost of land might have some limited useful life. For example, suppose we have done some improvement of land and that improvement we'll do after every 5 years. We purchase land for our business purpose and we have done some improvement. For example, for national cricket tournament. So you need to level the land and then you do need to do some improvement, and that cost of improvement, the life is 5 years. It means that that portion cost has limited life. So that will be depreciated. That will be depreciated. What they want to say? Depreciation on land. If the land itself has a limited useful life, it is depreciated in the manner that reflect the benefit derived from it, means as per SLM, RBF, as the case may be. If the cost of land include the cost of site dismantlement with dismantling cost, removal cost, and restoration cost. Are you getting what I am saying? Means you have purchased one land, you have constructed something, and that require dismantling, etc. That will be capitalized the cost of land, and that has limited useful life. So that will be depreciated. Nah, yes, sir. Then portion of land asset is depreciated over the period of benefit obtained by incurring those costs, but we do not have any question on this. No question on this. No question. But you need to understand land itself is a non-depreciable asset, but sometimes the portion of cost of land may have limited useful life. In that case, we need to depreciate it. Okay, sir. Building, can I say if you purchase land and building together, the building has what? Building has what? A limited life. Building has what? Limited life. Land has what? Indefinite life. But building has a finite life. Finite, we can calculate it. So in that case, we need to calculate depreciation on building. Okay. The building have limited useful life, and therefore they are depreciable asset. Even though you purchase land and building together, you need to separate land and building and then depreciate building portion. Okay, sir. Yes, sir. Let me see what question we can do. 9. This much so you have understood. You don't require my help. No. So if there is some good question, we'll do it. 9. What is given? Entity A purchased an asset on 1st Jan 2001 for rupees 1 lakh. Okay. And the asset has an estimated useful life of 10 years and residual value nil. On 1st Jan 2005, means at the beginning of the year, the director reviewed the estimated life and decided that asset will be probably be useful life of further 4 years. Means this is remaining useful life. This is remaining useful life. Calculate the amount of depreciation for each year if the company charge depreciation on SLM basis. Let us do. We are doing question number 9. What is the initial cost as on 1 Jan 2001? So you have purchased for what? 1 lakh. Correct. Less accumulated depreciation for how many years? So on 1st Jan 2005. So 2001, 2002, 2003, 2004. So 4 year depreciation already you calculated. So 4 year. It will be 1 lakh minus nil. Residual value is nil. What is the useful life? Initially it is how much? 10 year? 10 into 4. So what will do? 1 lakh divided by 10 into 4 is equal to 40,000. So this become carrying amount as on 31st December 2004. Now less depreciation for 2005. So this is 60,000. You say 60,000. Nothing has been given about residual value. Now remaining useful life they are saying 4. So divide by 4 you will do. So 60 divided by 4 is equal to 15,000. So now the depreciation 15,000 and carrying amount as on 31st December 2005 is what? That is 45,000. Understood? Simple. Let's see what they have given. Same thing they have given. It is 1 lakh means 60,000 they have calculated, and they have given 15,000 per month. Okay. Same thing. Same answer has been given. They have given para format. I have calculated. Okay sir, चलेगा. Question 10, interesting, लिखो expected in exam. Expected. A property costing rupees 10 lakh is brought in 2001. His estimated total physical life is 50 years. However, the company consider it likely that it will sell the property after 20 years. It means this become economic life. This become useful life. Economic life, useful life. I have already said economic life, useful life, depreciation is based on useful life, not economic life. So we need to find out useful life. The estimated residual value in 20-year time, case A 10 lakh, case B 9 lakh. Calculate the amount of depreciation. Case second is the cost price 10 lakh, residual value 10 lakh, therefore depreciation 0. In this case, depreciation will be 0. Super easy. But it is 9 lakh case number B. So 10 lakh minus 9 lakh divided by 20 will do. So 10 lakh minus 9 lakh divided by 20 is 5,000. Means this was interesting. Normally, if you have not done this and if the residual value is more than carrying amount or equal to carrying amount, you might be confused in exam. And therefore, they have already asked this type of question in exam. Already they have asked this type of question in exam. Okay, sir. Come to 19. Come to question number 19. 19 already we have done. Okay. Yes, sir. 26, I think you can do it by your own. Come to 26, good question already asked in exam. A Limited has the following asset. Calculate depreciation for the year ended 31st March 2020 for each asset as per AS 10 revised. Machinery purchased for 10 lakh on 1st April 2050. Residual value after useful life of 5 years is also 10 lakh. Depreciation 0. Depreciation 0. Okay. Land for 50 lakh. Depreciation 0 because land is not a depreciable asset. A machinery is constructed for 5 lakh for his own use. Useful life is 10 years. Construction is completed on 1st April 2019. 1st April 2019. But the company does not begin the use of machine until 2020. This is not at all relevant. This is the date when the asset is ready for use and therefore depreciation will commence from date from 1st April 2019. And useful life is 10 years. So 5 lakh divided by 10 is equal to what? For the year 1920, the depreciation is 50,000. Okay, sir, done. Machinery purchased on 1st April 2017 for 50,000 with a useful life of 5 years and residual value nil. On 1st April 2019, management decided to use the asset for further 2 years. Once again, 1st April 2019, a reassessment has been done at the beginning. It means you need to calculate your revised depreciation for which year? For 1920. For 1920. So first, you need to find out what is the carrying amount. So how many years already expired? 18 and 90 means 2 years already expired. You will say 50 divided by 5 into 2. How much? That will be 20,000. It means the carrying amount will be 30,000. Now 30,000 will be depreciated for another 2 years. So 30 divided by 2, 15,000 is the answer. 15,000 is the answer. Understood? 5 marks. Lollipop question. Lollipop question. To depreciation I have given time so that you don't do any mistake in exam. Don't do any mistake in exam. Okay, sir. This also done. Now come to the next point. Next point is about subsequent cost. Cost incurred after initial recognition. So we have done initial recognition, initial cost. Then we have done subsequent recognition, cost model, revaluation model. Now we are discussing about subsequent cost. Means any cost which is incurred during the period of use. Correct. There are 3 types of subsequent cost. One is known as day-to-day servicing cost. One is known as day-to-day servicing cost. Second is known as replacement or major inspection cost. Replacement cost or major inspection cost. And third, we can say any expense which increase the life or efficiency of the asset beyond the originally asset's life or efficiency cost. I think when I am saying this, any expense which increase the life or efficiency of the asset, it is as simple as whatever I am saying. Suppose you have a building, old building, and you have done the renovation of that building. So if you are doing renovation of that building, that will increase the life of that building now. Correct? Efficiency of that building, that will be also capitalized. So I think in this, no doubt, it will be always capitalized. I think no explanation is also required. No explanation required. Okay. And when I am saying day-to-day servicing cost, means this is nothing but repair and maintenance cost that is actually incurred to maintain the asset in its original condition. For example, you have a bike, and after every 6 months or 7 months or 8 months, you go to the mechanic and you do the servicing of that bike. To maintain the bike in its original condition, means that will not increase the efficiency, and therefore it will be charged to PL as an expense. Means when I say day-to-day servicing cost is nothing but repair and maintenance do not meet the recognition criteria, and this will be charged to PL account as an expense. This will be charged to PL account as an expense. I think in this, no doubt, but there will be one point: replacement of major inspection cost. This I need to explain. Now, when I say replacement cost means what already I have said. There are many components in an item of PP, and some component require replacement. Means suppose if I say camera, the useful life of the camera is 20 years, but is one lens, and lens need to be replaced after 5 years. So that is replacement. Correct now? Means we'll only replace the camera. We'll replace the camera or replace the lens. So we are replacing the component of an item of PP. We are replacing the lens for camera. We are not replacing the camera. Got this point? That is known as replacement cost. But remember, major inspection cost. Major inspection cost means what? Sometimes the item of PP require inspection after every interval. For example, after every 4 to 5 years. The best example I will give for aeroplane. Now you purchase aeroplane. Now as per one act, there is one National Aviation Act. What National Aviation Act says that after every 5 years, you need to perform major inspection of that aeroplane to avoid accidents. Nowadays, you have listened Air India wala case, Air India Express, that flight once it started, gone down, accident. Quite possible there was no inspection done. So when I say major inspection, it is beyond routine inspection. When I say routine inspection, it is routine repair and maintenance. When I say major inspection, means each part need to be inspected, and that require huge expenditure. When I say aeroplane, to each part need to be inspected, to each part need to be opened, and then inspection need to be done. So major inspection will not be done every year. Major inspection will be done after every 5 years, 6 years, as the case may be. So if I am saying for example, if I say every aeroplane require inspection after 5 years, means can I say inspection is giving benefit for 5 years? So therefore, it need to be capitalized. It need to be depreciated for 5 years. Correct? Got this point? So replacement cost and major inspection cost. What AS10 says that if it meet the recognition criteria. What was the recognition criteria? It is probable that future economic benefit will flow to the entity and the cost can be measured. If these two conditions satisfied, then will be capitalized. Otherwise, charged to PL account. From examination point of view, replacement cost and inspection cost will be always capitalized. Understood? So in this case, apply recognition criteria. If satisfied, capitalize. If not satisfied, charge to PL account as an expense. If not satisfied, charge to PL account as an expense. In simple word, try to understand. If I say this is one asset and there are 5 parts: A, B, C, D, E kar do, E. So these are component accounting. Now suppose cost of each component is 10 lakh, 20 lakh, 30 lakh, 20 lakh, 20 lakh. Useful life is suppose 5 year, 10 year, 15 year, 20 year, 25 year. Correct? Understood? And the total become what? 60, 100 lakh. Are you able to understand? Now what happened? After 4 years, After 4 years, old part A replaced by new part A, and the cost of new part is equal to 15 lakh. Understood? It means KNS is just try to understand. In this case, what need to be done? First token is we need to find out a carrying amount of old part at the end of 4th year, because that is included in the total carrying amount of PP. So that need to be recognized. So what we'll do, whatever we have the carrying amount of PP, from this we'll minus carrying amount of old part A, that too we can calculate, and we'll capitalize the cost price of new part A, and this will be the new carrying amount. Understood? So we can easily calculate. Now they have given different useful life. You can find out carrying amount of the entire PP by applying component accounting for depreciation at the end of year 4. At the end of year 4. Are you getting what I am saying? Correct. Let me solve this. Have you understood the question or not? First, have you understood the question or not? Let me solve this. What I want to say. This formula, have you understood? Let me solve this for you. This you make 40 year. 40 year. So we have what? Let me solve this for you. A, B, C, D, E, and total. What is the cost price? This 10, 20, 30. 10, 20, 30, 20, 20, 100. Can I say from this we'll do less accumulated depreciation for 4 years. So we'll do here 10 by 5 into 4. So we'll do 10 divided by 5 into 4. That is equal to 8. Then what is the useful life? 10. So we'll do 20 divided by 10 into 4. This is also 8. Then it is 15 year. So 30 divided by 15 into 4. This is also 8. Every amount is coming 8. Then 20 divided by 20. 20 divided by 20 into 4. This is coming 4. Then 20 divided by 40 into 4. That is 2. So this is the accumulated depreciation. How much? Total is what? 8 plus 8 plus 8 plus 4 plus 2. This is coming 30. Correct. This is 2. This is 12. This is 22. This is 16. This is 18. Understood? And this become what? 70. Once just check whether it is correct or not. 2 plus 12 plus 22 plus 16 plus 18. 70. Understood? Now you can see this is 70. So what we'll do? From this we'll minus carrying amount of old part A. What is the carrying amount of old part A? This deduct. And plus cost price of new part A. What is the cost price of new part A? That is 15. 15. Understood? So this become 70 minus 2 plus 15. That is 83. 83. Understood? Now if you see this 83 is what? Now 83, out of 83, new part A is 15. This is 12. This is 22. This is 16. This is 18. Check kar lo. 15 plus 12 plus 22 plus 16 plus 18, 83. And now what is the remaining useful life? Remaining remaining useful life is what? For 15. This can be used for another 5 years, because the part A useful life was 5 years. Means if you have purchased new part A, the remaining useful life for these, the useful life for these will be 5 years only. It can be again used for 5 years. So for this 5 years, for this how much? It was 10 years, but 4 years expired, 6 years. For this how much? It was 15 years, expired 4 years, 11 years. For this how much? It was 20 years, expired 4 years, 16 years. It was 40 years, expired 4 years, 36 years. This is the remaining useful life. Then again you can charge depreciation as per formula. Understood? I think this will help you. This have you understood or not? This I was supposed to explain कि whenever there is a replacement cost and is going to be capitalized, you will say carrying amount of PP minus carrying amount of old plant plus cost price of new part. Understood? This have you understood? Bolo. Have you understood this? Yes, sir. Got this point. That is only given. In this case, WDB of the asset means carrying amount of the asset plus cost price of new part minus carrying amount of old part. This is the revised carrying amount. This is the revised carrying amount. Okay, sir. Okay, sir. Chalega. This is one very good question. Let me take that question. Come to question number 3. After 11. It is 13. Make it 13, huh? Typo mistake. It is 13. 13 I will not do right now. 13 is also a good question. Very good question, but I will do at the end. I will better take question 16. This is question number 16. Yeah, this is the question. But again, Bharat Infrastructure acquired a heavy machine at a cost of rupees 1000 lakhs. The breakdown of its component is not provided. Now, breakdown is not provided. Means you don't know the cost price of each component. Okay. The estimated useful life of machinery is 10 years. Okay. At the end of year 6, the turbine, which is a major component of machinery, needed replacement as further usage of maintenance was uneconomical. So there was one part of the machine turbine that require replacement after the end of 6 years. The remainder of machine is in good condition is expected to be last for remaining 4 years. Means the remainder machine can be used for another 4 years. Means it is in good condition. The cost of new turbine is 450 lakh. Keep the accounting treatment of new turbine assuming SLM depreciation and discount rate is 8%. Discount rate is given. Discount rate is given. Okay. We are doing question number 16. Very good question. I'm taking from next page question number 16. Okay. Correct. Now in this, just try to understand what actually happened. This is Y0. This is Y1, Y2, Y3, Y4, Y5, Y6. And then this will be another use for next 4 years, means up to 10 years. Now you purchase a machine for rupees 100 lakh. It is 100 lakh, na? 1000 lakhs. Correct. And at the end of year 6, you replace old turbine with new turbine, and the cost price of new turbine is given 450 lakhs. But you can see in this case here the component turbine and remainder that is not given. It means you can't find out the carrying amount of old turbine. If you can't find out the carrying amount of old turbine, then can I say accounting whatever is given in AS10, that is not possible. So in that case, what AS10 says that if that is the case, you need to find out the cost price of turbine by using this cost price of replacement as an indication. Means this will be taken as an indication to find out the cost price of old turbine. And for that purpose, they have given discount rate 8%. Means can I say whatever you purchase as on this day, the future value is 450 lakh. Means same turbine, same component was purchased after 6 years at rupees 450. What is the present value? We can find a present value. The present value will be 450 multiplied by present value factor at a rate of 8% for 6 years. Correct? We'll say present value factor at the rate of 8% for 6 years. In FM, we write down in this way. Present value factor at a rate of 8% for 6 years. So what we'll do? 1.08 divide equal to 1, 2, 3, 4, 5, 6. So what is the discounting factor? We'll say 450 into 0.630. So it will be 450 into 0.630. It means it is 283.50. That becomes the cost price of our old turbine. It is once we calculate cost price of old turbine, now we can find out the carrying amount of old turbine, and then we can find out that we can do the accounting treatment as per AS10. This is the concept. Concept you understood? Have you understood? Same thing is done here. You can see they have also calculated estimated cost at 283.80. 283.80. Understood? Any doubt? Batao. Have you understood this point? चलेगा तो write down. Solution. Calculation of cost price of old turbine. Correct? So that will be equal to present value of replacement cost of new turbine, that is 450 lakhs multiplied by present value factor at 8% for 6 years. We can add in this way 8% for 6 years. Just have you understood? 8% and we need to calculate for 6 years. In FM, you write down in this way. So I am only teaching that part. You will be able to understand already. I said you will become expert for present value FM. Okay. What you will do? 1.08 divide 1, 2, 3, 4, 5, 6. You can say 450 multiplied by 0.6301. I have taken 4 decimal now into 0.6301, that is coming 283.55. So this is the cost price of turbine. Okay, sir. Now we can find out carrying amount of the turbine and machine at the end of 6 years. Calculation of carrying amount of old turbine and machine as a whole. You can see we'll divide. We write on old turbine, then balance part and you can say machine. What is the initial cost? The initial cost I have written 283.55. This is 1000. 1000 minus 283.55 is equal to 716. 716.45. Now we'll say accumulated depreciation for 6 years. So we'll do 6 by 10. 6 by 10. It is 283.55 into 6 divided by 10 is equal to how much? That is 170.13. This 716.45 into 6 divided by 10 is equal to 429.87, and this will be exactly equal to 600 only. The sum total of this also equal to 600. Now you can find out carrying amount. Carrying amount is what? 283.55 minus 170.13 is equal to 113.42. This is 716.87 minus 429.87 is equal to 716.45 minus 429.87 is equal to 286.58, and the sum total of this will be 400. Correct? Understood. This you have understood. Now we'll do the accounting treatment of what? Means what is the carrying amount of the item or machine after replacement? Calculation of carrying amount of item of carrying amount of machine after replacement. We will take carrying amount of machine at year end 6. How much? 400. From this will minus carrying amount of old turbine, that is 113.42, and plus cost price of new turbine, that is how much? 450. So this becomes the carrying amount of machine after replacement. So this is 400 minus 113.42 plus 450, that is 736.58. Understood. Very good question. Till now not asked in exam, but can be asked in exam. Already given RTP, can be asked in exam. Bolo 736.57 means my answer is 58 there as a 57 because of approximation difference. But have you understood this entire calculation? That you need to understand. In exam, don't write down this much. Only if you write down this way, this much, now you will be able to get the marks. Okay, sir. Understood. So your replacement accounting also understood. The last note was based on this only, based on question 16. If it is not possible, determine the carrying amount of replaced part. Cost of replacement will be used as an indication of cost of replaced part, which was at a time when it was acquired. Got this fine? Correct. You have understood subsequent costs also. Now only few points are left. Impairment loss, nothing to teach. Retirement, then derecognition, and then we need to do the scope of disclosure. Means more or less AS10 is complete. A few points are left, but that will also require some time. But I hope whatever we have done today you have understood. Believe me, I said AS2, AS10 I am teaching you in detail. Means everything will teach you in detail, but AS10 I am very slow, because once you have understood AS10, the other accounting standard will be super easy. This much only. Thank you very much. I already said, treat me as your big bro, bhaiya. Whatever doubt you have, ask me in the group. Don't hesitate anytime for any difficulty. Thank you very much. We'll meet tomorrow. Till then, okay, you need to give me ijazat. Okay, meet you soon in the next video. Bye bye. Love you.